Hey, thank you everyone for joining us here, taking time out of your busy schedule to join us for our first time home buyers seminar. And today we look forward to talking with you about some of the steps in the process for purchasing your first home. So we have a panel of special guests. We have our lender, Steve Caldwell with Mortgage One. All right, he'll be talking over the loan details. We also have PJ Harris with 360 Credit. And also, Chris Williamson will be joining us here soon. He's having some technical difficulties, but he'll be joining us to speak over some of the things to look for from a home inspection standpoint. Okay, so without further ado, let's go ahead and start getting into this segment here of first-time home ownership. So I am your host. My name is Tyrone Powell with EXP Realty. I go by Ty. All right, I partner with my wife and business partner, Kristel Powell, who's also here today as well. So she'll be chiming in here in just a moment to go over a few things throughout the course of the seminar. Let's talk about some of the first things that we're going to think about when we're looking to purchase a home. You probably want to go ahead and get started. You probably have a lot of things that a lot of questions that you want to get answered. And we're going to be more than happy to answer those questions for you. So first things first, do I have to pay a realtor commission? Because I'm a realtor. A lot of buyers are not sure if they, do they have to pay their realtor? So you don't actually have to pay a realtor anything. It actually, the realtor's commission comes out of the seller's equity in their home. All right, and we can go over that in detail once we actually meet up and meet in person. The next thing that you're going to have is what's called the agreement, or an exclusive buyer agreement with a realtor. A realtor is most likely going to have you to sign one of those before they take you out and start looking at properties. So we wish that we can actually go back in the days where things is done on a handshake deal, but unfortunately those days are over. So before a realtor before you contact a realtor, they might have you to sign one of those documents before they take you out and start looking. They might have you come into their office or to like a Starbucks, things like that. And nowadays you can even do it online. Okay. Now let's look at why should I buy a house? All right. So year over year, the sales of properties have been increasing, especially in our area, at least for the past couple of years. We took a look into it. It's anywhere from 3 to 6% increase in price every year for the past 2 years. 2019 to 2021, that equated to about an 8.6 increase. That's about $31,000 in an increase in property values, right? The other thing that you want to look into as well is that you're actually going to pay less in taxes, because the interest from your mortgage can actually be deducted as taxable income. All right. You also are going to be able to create long-term wealth, because everyone knows that the fastest way to becoming a millionaire is actually through real estate, right? We give you some freedom and stability where you can actually invest in properties and be able to create some passive income. And that passive income will definitely help you get that freedom and stability that you want in your life. And one of the best ways to invest your money is definitely in real estate. All right. Okay. Moving on. All right. So why do I want to buy a home? Right. I want to buy a home. Am I ready? You might not know if you're ready. If you are, you might be, you might not. Right. So there are several reasons why someone might be, considering purchasing a home. They may have some, might not know if they're ready to purchase a home. They might have some credit issues. They might be, tired of living with their parents. Right. They might be just tired of renting and then just making someone else rich. So these are a number of different reasons, but we're here to help you today figure out if you can qualify and to get you onto that right path. Okay. All right. So what's next? So the next thing that you're going to want to focus on is determining how much you can afford. So generally you want to spend about 28% or less of your gross income on your mortgage. Next thing you want to do after that is you want to get pre-approved and speak with a lender. And I say pre-approved versus pre-qualified. a pre-qualification is not as thorough as a pre-approval. So you definitely want to get the pre-approval letter. And then once we get out there to start looking at properties and submitting offers, we're going to want to have that pre-approval letter attached to the offer when we're out there submitting it. Okay. All right. So your next step will be actually to speak with a lender. So with that here, I'm going to slide it over to Steve Caldwell over at Mortgage One, and he's going to talk to you about some of the different steps in the lending process.
Hi, everyone. My name is Steve Caldwell. I'm a loan officer. I work at Mortgage One out of Woodhaven, our downriver branch here. And I've been working in
Can't hear you, Steve.
now. Oh, you can't hear me?
Can't hear you.
Oh, man. Can you hear me now?
Hold on, I can hear you.
Sorry, Ty.
Okay, there we go. I hear you now.
Oh, sorry, everyone. Not sure what happened there. Just to reiterate, my name is Steve Caldwell. I work at Mortgage One. I work out of our Woodhaven branch. I'm a loan officer. I've been working in the business for about 7 years now, and have been a full-time loan officer for going on 4 years, somewhere in that range. So I know, the business pretty well in and out, and I'm here to talk about stuff that we see and a lot of our frequent questions that we get, so it can help you and help educate you when it comes to moving forward in the mortgage process. So let's go into some of the questions, and then we'll go from there and answer some of these so we can educate you on some of the common things that we see in the industry. So one of the big things that I hear is, why do I want to speak with a lender before I start the mortgage process? I think I'm buying a house here. Why would I want to talk with someone that does mortgages? Well, in all actuality, the mortgage is what's going to really get you the home when it comes to the financing portion of it. And what we do is we pre-approve the buyers, so then you can go out there and shop with the pre-approval letter. The pre-approval letter lets you put offers in on a home so it can get accepted. The realtors, they're going to take you out there and look at houses. But without having that letter, you can't officially put an offer in on a home. And it won't, and even if you do somehow, it won't get accepted, because when the listing agent's looking through all the documents to accept the offer, they're not going to see that you've been pre-qualified and pre-approved by a mortgage lender, and they're not going to accept it. So it's important to talk with the mortgage, the side, get that figured out first before you officially go out there and shop, because you want to be pre-approved. You want to have that pre-approval letter in hand, just in case you find the house of your dreams and you don't want to let it pass you by. You want to put that offer in. So another question that we get a lot is, what type of credit score do I have to obtain a mortgage? There isn't like a specific credit score that I can go to and say, if you have that score, you're good to go, because there's debt to income ratio limits that come into it and whatnot. But credit really is the foundation for the mortgage. It's our first hurdle that we have to cross when starting the process. What we do is we go over an application. By going over that application, we'll be able to run your credit. Credit, like I said, it sets the foundation for the loan. It's one of the 3 main pillars that we use when getting someone pre-approved. You have to have, at least with our company, above a 580 plus to get approved. I would realistically say I'd like to see 640 plus, but anything 580 plus is what we can use to pre-approve someone. If you're going FHA, which is, Federal Housing Administration, if you're going one of those loans, you got to be between at least 580 plus. And then I would realistically say you want to be 580 to 700, somewhere in that range. Conventional loans, generally speaking, you're looking 700 plus to do a conventional. Now, I have got conventionals approved before. Technically you can get them 620 plus. I've got them 660, 640 plus, but there has to be some good compensating factors to get approved conventionally with a 640, 660, 680 type of credit score. But you got to be 580 plus in order to buy a house through Mortgage One. Now, when it comes to starting the mortgage process, that's another question we get a lot, because it's very overwhelming. You're buying a house, first time you've ever done it. How do I start this process? So what we would do is we'd go over an application. We do it either on the phone. I could send you out my online application via email, or you can come into my office and we can set up a meeting and go through it all in person. Whatever works for me, is fine. Whatever works for you, we'll make it work. The first step of the process is to do the application. Then we run the credit. Based off the application and the credit, I'll have a good understanding on what we can do with the file. From there, I will need some documentation to get you pre-approved. And I'll send you a list of the documentation that we need once we've conducted the application and such. Documents that we need are essentially going to be 1 month's worth of your most recent pay stubs, 2 months worth of bank statements, most recent, obviously, copy of your driver's license, the last 2 years W-2s, last 2 years tax returns, and then I'll send you a borrower's authorization sheet as well that we need signed, just in case we need to order a verification of employment or something on you. Sometimes, depending on each circumstance, the loan could require a verification of employment being ordered up front, so we know that we can, the type of income we can use and whatnot. Sometimes we can't just break it off of the pay stubs and W-2s. Once we have all that information, I can break the file down. We can get a good understanding on what we can do, and I'll send you out the pre-approval letter. Or if there's any issues, I'll call you. Hey, here's our issue, and here's how we have to get around it and work towards either the future, or we need some more information in order to get it. Now, one thing I didn't say with the documentation is, let's say you're on Social Security. And instead of pay stubs, if you don't get pay stubs, we would need a Social Security awards letter, your most recent one of those, Social Security 1099s. Same with that. If you're on pension, we would need, your pension statement and W-2s for the pension. But that's really how we start the process. From there, another question I get is, how much money do I need to have saved to buy a house? It's kind of a misconception. You hear a lot of people thinking I need 10% to put down in closing costs, or I need 20% to put down in closing costs. That's technically not true. If you're a first-time buyer, you can go with an FHA loan, which requires 3.5% down, and there's closing costs and whatnot that you'd have to pay. From there, you could also do a conventional loan, which requires 3% down for a first-time home buyer, and then there's closing costs and whatnot. But there's also a really good program in the state of Michigan that is abbreviated as MSHDA, Michigan State Housing Development Authority. We call it MSHDA. They have 2 programs that you can use in order to obtain a non-interest loan from the state of Michigan to help close on a property. Now, you do have to qualify within their program limits. It is credit score. There are credit score qualifications, which are 640 and then 660, depending on the program you're going to use. But with that program, you can get a non-interest loan from the state of Michigan to help you close on a property. Depending on the areas, you can get up to $7,500, or in certain areas, you can get $10,000 to help close. What you can use that towards your down payment and closing costs, and then whatever's left over, you'd have to bring. So realistically, if you're a first-time buyer and you can qualify for that program, you might only have to have a couple grand into the program or into the loan to get it to work. Sometimes you might even need less, depending on the purchase price and what your needs are in the area you're buying. So, you don't need 20% down or 10% even. You might only need a couple grand if you're a first-time buyer to buy a home. Another question that we get a lot is, how much money do I have to make to buy a house? And there's not a specific answer on that, because it all bears down to your debt to income ratios and then what you're looking to buy. So, I've had borrowers that come in that are making, 10, 20 grand a month. They can't buy anything because they have too much debt. I have other buyers that come into the process that are maybe on a fixed income of $1,200 a month with Social Security, and they don't have any debt, so they can buy something. And it all also depends on what you're looking to buy. If you're, comfortable with a certain payment and you can meet that payment, there doesn't have to be a set amount of funds that you have to make monthly to buy a house. It all depends on your certain situation. Another question we get a lot, again, is what type of documentation do I need to provide to get pre-approved? And I kind of went over that already, with the pay stubs, tax returns, W-2s, bank statements, driver's license, that borrower's authorization sheet, which I'll send you. And then again, if you're, let's say you own a current house, we might need your mortgage statement or your homeowner's policy. Along with that, if you're Social Security, that Social Security awards letter and 1099. So it does all depend on the circumstance, but that's a generalization of the documents we need. The next question is, how long does it take to typically close on a mortgage? it typically takes about 30 to 40 days, right in that range, to close on a mortgage. That's from the offer getting accepted to you signing on the close date. Now, have I done them, where we've gotten them closed earlier than that? Yeah, we have. It ran really smooth. The appraisal was good. Salary borrower, everything was good. Sometimes it does go a little over that. It all depends on the file and the circumstance. Sometimes there might be an issue with the appraisal, which require the seller to do a little more work on the property. Sometimes there's a title issue. Sometimes there's an issue with the file that we need some more information, and it takes a little longer to obtain than we would normally think. So ultimately, it's about getting you to the closing table and getting you in the house. And that's what our goal is and what we do. But generally, it takes about 30 to 40, 45 days to close the loan. And then, are there any first-time homebuyer programs that we can help with the down payment? Yes, as I kind of hinted a little bit, and I'll go into a little more detail here. The Michigan State Housing Development Authority is the program that we utilize a lot at Mortgage One and myself. There's two programs that they have that we really look for. Is the Michigan My Home Loan program, which is a 640 credit score requirement, and all adults in the household have to be on this loan. And then there's the Flex MISHDA program loan, which is a 660 requirement, and you can drop off one of the spouses or one of the multiple adults, if they're going to be in the household, off of that and qualify with just one adult, as long as their credit score is over a 660 and they meet the other loan requirements. It's a statewide program. You can get up to 10,000 in certain areas to help close. The lowest you can obtain up to is like 7,500, somewhere in that range. But it's a great program that really stimulates the house buying economy and gets people into houses and gets people out of renting. You don't want to pay to some landlord that's just taking your money. They're actually paying into something that is going to build equity and build wealth over time. So it's a great program for that. And, hopefully you guys learned some stuff from me today. Hopefully I can answer some of your questions after the seminar, and then from there, hopefully working with some of you. But thank you for your time, and I'm going to give it back to Ty here, and we'll go from there.
Thank you, Steve.
All right, awesome. Okay, so after that, you got your mortgage all set to go. Then the next thing you're gonna want to do is actually find the right real estate agent. And like again, myself and Kristel, we're both realtors. We would like to be that realtor to help you through the process. Because not all realtors are actually created equal, right? You have agents and you have realtors. Realtors are actually held to a higher standard, where they are constantly doing continual education. They're also, getting different types of certifications to help them to be more equipped and efficient at doing their job and helping you to get the best deals. There's a program that's called the PSA, or certification rather, and stands for Pricing Strategy Advisor. That's where a realtor can actually get in and help you price your property and find a property at the best price. And then you also have the RENE, which stands for Real Estate Negotiation Expert. And that's where that realtor will know the different tactics and things like that to help you negotiate top dollar or to get the best deal for the property that you're looking for, or even just get the property, especially in a very competitive seller's market. All right. What does your agent has to offer? So some of those things I mentioned above kind of aligns with that. You might be wondering, why should I even get an agent, right? Some people think they can do it on their own, but an agent is your own representation, especially a buyer's agent. They have a fiduciary towards you. They're going to be looking out for your best interest and making sure that you're able to get a great deal on your property. And they know what to say and what not to say when they're talking to a seller, to a seller's agent, things like that. So you definitely want to have your own buyer agent representation. Some people might be wondering, again, how much does this cost, for an agent? So like I mentioned earlier, an agent's representation doesn't cost anything to you. It actually comes out of the seller's equity in their property. And, but you still get that agent as your fiduciary. Okay. Moving on.
All right. And so the home shopping fund has begun. let's start looking at homes. And we're going to be able to set you up on your home search based on whatever your personal criteria is, such as like if you like a ranch home, you prefer a house that has a basement and a garage, how many bedrooms you need, things like that. We can also attend open houses together. We also work with you on new construction, and we will get every showing scheduled.
All right, thank you, Crystal, for that. All right, so we're moving on to the next one. So after all of that, you found the perfect property, and you're ready to make an offer. Crystal will let you know about what you can do in order to be competitive.
Okay, so when making your offer, we're going to go over some different strategies on what you need to do to be competitive. We'll talk about going over the listing price. A lot of times what you see on that shopping, they put it for a certain price, but a lot of times they might even market it below the market value. So we'll discuss more of that. And then there's such thing as appraisal gap, and that's just offering more than what it was listed for and covering the rest if it doesn't appraise, but we can also discuss that more in depth. And offering a seller some occupancy after closing. So these are all some of the great options of how to make your offer stand out from the rest. And we'll, definitely discuss those more in depth when you are out there ready to make your offer.
All right, thank you very much for that, Crystal. All right, so we're gonna move on to the next spot, right? So the next one is, okay, the offer was accepted. Now your property is under contract. What do I do next, right? So you would actually need to get your property inspected. Now we do have an inspector. He was having some technical difficulties here. What I'll do is give you his intro, and he's actually going to speak on the speakerphone, and then we will ask him the questions, and you'll go from there. Okay. So give me just one moment. We're going to get him on the phone here and go from there. All right. Hey, Chris, I got you on speaker here. So
Okay,
we are all right. So we are at your segment here. So we are talking.
Well, let me get to the PowerPoint so I can, or maybe you can just read the questions too.
You're right.
Go
So
ahead.
everyone here, we got Chris Williamson here. He's a certified professional inspector with Trademark Home Inspections. And if you notice on the screen, you might see their certifications. So there's a lot of different certifications that is there. You see the certified residential thermographer. There's certified experts and on and so forth. So when you talk with Chris, you might wonder what all that means. He'll be able to explain all that to you in detail. But we're going to go ahead and hand it over to Chris. Chris, can you tell us a little bit about yourself, how long you've been doing home inspections, things like that, and then we'll get over to the questions.
Sure. Well, thanks everybody. Thanks for having me, Tyrone. I just wanted. I've been at this not that very long, really, less than 3 years, but I've really been working towards this my whole life. I've been in the building trades since I was a teenager, and so I've built houses and I've torn them down, so I know the ins and outs. So as I got older and construction got a little bit more physical than I liked, I thought maybe someone suggested I put to work to become an inspector, and that's what I've done, and it's been a great move for me. So I'm real happy doing it, and it kind of fits me real well.
All right, awesome. Thank you, Chris, for that. And so we're going to go ahead and move on to the questions here. So
Yes, please.
You got it.
Actually, just to check in real quick, can everybody hear him okay so far? Can we get a thumbs up?
Okay, yeah. Sound check is
Oh, okay, good.
Sound check is
Great.
good. All right.
Sound check's good. I see nothing. I'm nowhere near anything. This is just a phone call, so this is great. All right, let's have it.
All right. So first question for you: is it okay to perform the inspection myself?
I think it's probably not, unless you're a home inspector. And even then, if you're asking me, let's say, would I do it myself? I wouldn't do it myself because I'm biased, and then I have no real third opinion or a report that can help me maybe when I'm going to buy the house, or just to point out those things to the homeowner. So anyway, I wouldn't do it myself, no.
Okay, excellent. And then what is the cost of a home inspection?
Oh, well, our company does it based on square footage, as most do. I think the average cost right now is between $400 and $500 for a house, probably up to 2,200 square feet, something like that. And then additional services would add to that cost. So things such as radon testing or sewer scope camera. Those are additional services. So then and if those are added, that could be another $200, almost $300. So, that could add, the cost can range anywhere from $400 to $800.
All right, all right. So when it comes to what is covered under the home inspection, I guess the general inspection, can you tell me what's covered under that?
Sure. So I mean, I'm reading or listening to my question. I'm saying what do we inspect? So we're looking at the systems of the house, the siding, the roofing, the drainage, the electric, the plumbing, the ventilation, the roof, the attic, all those things. Those are the components of the house, that the systems that make up the house, and those are what we are most concerned about, and that's what we inspect. There are a lot of other products, things like let's say window coverings or blinds, that because that we don't inspect things like alarm systems, things like that are not on every house or part of every. Those are not covered, but the major systems of the house, that's what we look at. That's what we want to make sure, and we can convey whatever information we find out about those systems of the house in our report to the potential homeowner or the buyer of the house.
All right. Okay. And Chris, how long will the inspection take?
Again, that depends on the size of the house. Obviously, a bigger house will take longer, but generally speaking, 2 to 2.5 hours, sometimes a little bit longer, depending on the size of the house, the amount of testing that is going on. But you plan on 2 hours anyway.
About 2 hours.
All right. And is anyone allowed or required to attend this inspection?
Is anyone required to attend it? No, I really don't think anybody's required to attend it, except perhaps the realtor to give us access to the home. But other than when, I think it's a real benefit for a potential buyer to be at the inspection, because our goal is, again, to teach you about the house as much as we can. So if you're there, we can point out while you're standing there things that are good, things that are bad, and you can get a lot from it. But you certainly don't have to attend it. As far as who's allowed to, it doesn't bother me if family members are checking out the house at the same time. But at some point you have to have room to move around and do the job. So that I think limiting the number of people is not a terrible idea either during an inspection like that.
Okay, excellent. And then what happens if there are problems found during the inspection?
Well, that is my job, right? To find things that are potentially wrong with the house and to point those out to the potential buyers. So that's what I do, and I just really deal with the facts. So if I find a problem, what is deemed or considered a problem by the home buyer or anybody, then that is a problem that has a solution.
Hey, Ty, we can't really hear him too well.
Okay.
So, what was that? I'm sorry.
I'm sorry. They were saying they couldn't hear you that well, so I'm putting you closer to the speaker.
Okay. Well, again, if there's a problem, that is up to the buyer and to determine what is a problem. Because once I give you that information, it's really up to the buyer to decide, is it going to be a problem going forward buying the house, or is it something that can be fixed or something that can be addressed? And that's the decisions that, like, dealing with their professional realtor and the buyer, they can make that decision. I just kind of arm them with the information.
All right. That's definitely a great question, Chris. I do appreciate you answering those questions for us.
My pleasure.
All right, so we're gonna move on to the next slide here. So you might say, okay, well, that's all fine and dandy, but I don't have the credit to actually get myself ready to, the purchase of property. So what do I need to get myself prepared? So I'm gonna hand it off here to PJ Harris with 360 Credit, Senior Regional Manager there. And he's gonna go over some credit tips and strategies in terms of what to look for in order to improve your credit.
Yeah. Hey, everybody. Again, my name is PJ Harris. I'm the Senior Regional Manager with 360 Credit Consulting. Just wanted to talk to you guys a little bit about kind of how credit works and what goes into it to really make up credit score. So when it comes to credit, most people don't really know exactly how credit works. It's not taught in schools. You just kind of hear, about if I just make my on-time payments with my credit cards or my auto loan, then I will have a good credit score. And that's not always the case. When it comes to credit, credit is a little bit tricky and it's a little bit backwards. So studies have shown that 80% of credit scores have some sort of detrimental error. So what I mean by a detrimental error is it could range anything from fraud to a mistake that the bureaus or the collection agencies put on the credit report, or anything that's missing, that has misinformation on it. So some of the questions that we get asked the most, how long do negative items stay on my credit? So late payments, collections, charge-offs, repos, anything like that, they can stay on your credit report for 7 years. After 7 years, eventually they can fall off, but we want to be able to try to get those removed a lot sooner to boost that score. Bankruptcies, it's a little bit of a different story. They can stay on your credit report for 10 years, but it all depends on what is in that bankruptcy umbrella. Different states have different times and everything like that. The next question that we get asked, if I pay off a collection or charge off to a $0 balance, will it get removed from my credit report? The short answer to this is no. It actually, paying off a collection or a charge off to a $0 balance can actually hurt your credit score. So what happens is there's a line on your credit report that says date last active or DLA. And if it's from 2017, let's just say, and you pay it off today in 2021, it will reset that. Your score can actually drop. So we run into a lot of credit reports where people think that they need to pay off that collection or that charge off to a $0 balance, and they think it will halt their score, but it actually hurts your score in return. So like I said, credit is definitely a little bit backwards. The next question, should I open a credit card if I don't have one? Yes, you definitely need to open up a credit card. Without having a credit card on your open and active, you're missing out on 30% of your credit score just right off the bat. So you need to go to your bank or your credit union and see if you can open up what's called a secured credit card. That is, you're taking the loan out on yourself, whether the minimum is $200 or $300, you're putting it on the card, and that becomes your credit limit. And then that will start reporting to the credit bureaus, and that will help your score tremendously, actually. Another thing you can do is become an authorized user on a credit card. What that is you find someone, a family member, best friend, they can add you on their credit card as an authorized user. So you will obtain all of the history as long as that card has been open. And if it's reporting to the bureaus, then it will start reporting for you as well. And I've seen people jump up 100 points just by adding, becoming an authorized user on someone else's credit card. So that's definitely a huge plus. The next question, what is the difference between Credit Karma and your FICO score, or what a mortgage company would pull? Credit Karma, Credit Sesame, any of those online free credit monitoring systems. They're using what's called Vantage scoring. What Vantage scoring is it's just more of an informational poll. And the scores will most likely be inflated because they're not taking into consideration any positive or negative when it comes to the algorithm. So it's more of an informational poll. So it's not going to be 100% accurate to a true score or what you're going to need to get approved for a home loan. There's over 50 different algorithms out there. If they're all reporting to all 3 credit bureaus, then there's over 150 algorithms, and they're technically all correct. But in the mortgage world, they're focused on anywhere from 8 to 13 of those algorithms to get you guys approved for a home loan. So going to a mortgage company and saying my credit score says I'm at a 700, well, that's not the case. It's most likely going to be less than that. So the next and the last question here, does paying off an installment loan help or hurt my credit? It will actually hurt your credit. So your auto loans, your student loans, mortgages, anything like that, paying it off to a $0 balance can actually hurt it because they're closing that account. So it goes from an open and active account to a closed account, and you're losing all of the history for as long as that account has been open. So in the auto industry, you have a 5-year loan, you're making your on-time payments, everything is good. That last payment you make, you feel good about it. Awesome, you paid off that debt. Well, that 5 years of history that you had on that card will then, or on that loan, will then be closed out, and you'll lose that history. So that is what makes that score drop. Other than that, those are the most frequently asked questions that we get doing credit restoration or credit repair. I would love to answer any other questions that you guys may have. Put them in the chat, send us emails, whatever it is. You know, I look forward to working with you guys or answering any questions that you guys may have about credit, and I'll throw it back to Ty. You're on mute, Ty.
Thank you. We appreciate that, PJ. That was great. All right. Okay, so let's move on to the next part of this here. So now that you got your credit restored, found your realtor, you got your lender, got your pre-approval letter, put out an offer, you're under contract now. So you definitely want to work with your lender and realtor to secure your loan and to maintain the different dates. So one of the things you probably need to get once you're under contract is you want to get homeowners insurance quotes, and so you can speak with your lender to secure your loan, and also they may have some contacts for insurance and things to that you can shop around. And this is very important right here. You definitely do not want to make any large purchases. In fact, I would actually share with you guys the 10 commandments of what not to do when you're getting ready to purchase your home. Doing any of those things could possibly cause your buying a home to go up in smoke. You're going to burn the house down before you even buy it. You don't want to be that person. Okay. All right. And then bullet point 3 is you want to maintain contact with your realtor, so to help ensure that you meet the different dates and deadlines. So there's be lots of paperwork that you need to go over. So keep in contact with your realtor so that we can meet those dates and deadlines. All right. Now, after that, the next phase in this process will be the home appraisal. So a realtor can give you what's called a comparable market analysis report, but only a licensed appraiser can give you the value, right? So a good realtor can give you that market report to kind of give you a gauge on what they think of, or an appraiser might say, but don't confuse that with an actual appraisal, okay? Moving on. All right, so again, I mentioned before, there's going to be a lot of paperwork, a lot of things that you have to do. I see sometimes it can be, this is a rewarding process in terms of purchasing a home, but it can also be frustrating between all the paperwork that you have to do. And, but you want you to stay focused on the end goal, see yourself, like I said, on the deck with your swimming pool out back, if that's your thing, your pina colada, whatever you like. and you know, just see this, vision yourself in your new home. We will help get you there. All right. All right, so after that, you know, all the paperwork is done. Our next phase is we are at the closing table. So congratulations, you made it. You'll be scheduled your closing at the title company where you'll sign all your final documents, and then now you're a new homeowner. All right, so what I'm gonna do for you guys is I have a more detailed booklet in terms of, you know, all the various phases in the home buying process. It has all of their contact information as well as mine's as well. So it's a great tool to read over once over again. I do appreciate you guys taking time out of your day to join us for our first time home buying webinar. And if you have any questions, this will be the point where you will actually send it over to us, and then we will answer it as we go from there.
Yep, so we'll look into our chat box now just to see if there are any questions that anyone might have posted. Okay, looks like there's no questions currently to answer, so we'll just take a few more minutes here, I suppose. And
at this point, again, we want to thank everyone. We're going to send over our contact information. It's all in the post online. And feel free to reach out to us afterwards. We'd be more than happy to answer any questions that you may have in regards to credit improvement, applying for a mortgage, or actually getting out there to start looking at a home once you get all that stuff situated and taken care of. All right, so I hope you guys have a great day. I'll talk to you soon. All right, have a blessed one.
Thanks, everyone.
thank you.